Welcome to the deep dive. Today, we're jumping straight into a really interesting, maybe even a bit challenging viewpoint.
Hmm.
It comes from Matthew Crowder over at Bitcoin University. The article, How MicroStrategy, MSTR, Could Go to Zero.
Quite a title.
Right. But hold on, before you think market crash, this isn't really about predicting the price falling off a cliff.
Not in the usual sense, no.
Exactly. What we want to do today is unpack Crowder's argument. He's saying the biggest risk to Bitcoin and, by extension, companies like MicroStrategy that hold so much of it, maybe it's not about bad financial decisions.
Okay, so what is it then?
It's something deeper. It's about how the Bitcoin community, the users, are engaging with the technology, or maybe how they're not engaging with it.
Ah, interesting. So usage patterns.
Yeah. The big question we're tackling is Bitcoin's original vision, the whole decentralized dream, is that dream at risk because of how people are actually using Bitcoin day to day?
It's a fascinating angle. And, you know, Crowder starts off by actually giving credit where it's due. He talks about Michael Saylor and MicroStrategy.
It does, yeah.
Calls that massive Bitcoin buying spree a masterstroke of financial engineering, which, I mean, it kind of was.
Definitely innovative.
But here's the catch he points out immediately. MicroStrategy's success, its whole future, it's completely lashed to Bitcoin's success.
One depends entirely on the other.
Totally. If Bitcoin stumbles on its core mission, whatever that mission is, then MSTR goes down with it. Doesn't matter how clever the financial footwork is. It's a direct link.
It really is like building a skyscraper on potentially shaky ground. The building might be amazing, but if the foundation cracks.
Exactly. And that ties into another point he makes, which I found really thought-provoking. It's about who thinks they own Bitcoin versus who actually does.
You mean people buying things like MSTR stock?
Yeah, MSTR, or he mentions other tickers too, like MSTX, Strike, Strife. These publicly traded ways to get exposure. He's worried retail investors see these and think, okay, I own Bitcoin now.
But Crowder's saying that's not quite right.
Not in the way Bitcoin was intended, no.
Right.
He draws a sharp line between getting exposure to the price movements and actually holding your own Bitcoin, with your own keys.
The whole not your keys, not your coins idea.
Precisely. He argues these stock-like instruments, they're really built for institutions, for their strategies. They're not designed for the individual user who's looking for that decentralized control, that sovereignty away from the traditional system. It's a different ballgame.
Okay, that makes sense. And this feels like it connects directly to what he calls Bitcoin's forgotten purpose.
Yeah.
He's pushing back against the idea that Bitcoin is just another asset, something to trade to beat the S&P 500.
Yeah, he thinks that misses the point entirely.
The core idea here, if I'm getting it right, is that we need to look beyond the price charts for a sec. Crowder believes Bitcoin's real power, its fundamental value, is being censorship resistant.
Right, and a way to exchange value outside the control of banks and governments.
He actually says it's a tool to defeat fiat systems and central banking control. Pretty strong words.
Very strong. So if you just treat it like another stock, just another way to make dollars within the existing system.
Then you're kind of undermining its revolutionary potential.
That's exactly Crowder's fear. Its utility as this separate, decentralized thing starts to fade if it just gets absorbed and traded on the very platforms it was supposed to bypass. It loses its edge,
Okay, so let's dig into how Crowder thinks this. This potential demise, as he puts it, could actually happen. What are the specific worries?
Well, one big one is the reliance on centralized platforms, exchanges like Coinbase, for instance.
How does that hurt Bitcoin?
His point is, when most of the trading happens there, or, say, between big banks like JP Morgan and Goldman Sachs, they get involved, a lot of those transactions might just happen on the company's internal books. They call it off-chain.
Meaning it doesn't touch the actual Bitcoin blockchain itself?
Not necessarily, or only maybe at final settlement. So the Bitcoin blockchain, the public ledger, it becomes less essential for the day-to-day movement of value. It's like it's sidelined.
Okay, I see.
And Crowder thinks that's not real Bitcoin usage, not the kind that strengthens the decentralized network. It just makes the central players more important.
And building on that, he also worries about what he calls blockchain spam. What does he mean by that?
He's talking about things like inscriptions, ordinals, basically embedding non-financial data onto the Bitcoin blockchain. Pictures, text, that kind of stuff.
Right, using the block space for things other than money transfers.
Exactly. And his concern is that Bitcoin's block space is limited. It's valuable real estate. Filling it up with, in his view, non-essential data could make it harder or more expensive for actual financial transactions to get through.
So it could harm its core function as a payment network?
That's the worry. It shifts the focus,
Hmm.
potentially weakens its utility as this peer-to-peer electronic cash system it was originally designed to be. It raises questions about priorities.
Yeah, definitely. And all this, the off-chain stuff, the potential clogging it leads to another major concern he has. People
Yeah.
just aren't spending Bitcoin enough.
Low usage as a medium of exchange.
He says something really interesting here. Bitcoin scaling problems aren't mainly technical. It's not that the tech can't handle it, it's that people aren't really using it enough to push the limits.
That's a key insight. The hodl mentality,
Yeah.
buy it and hold on for dear life, hoping the price goes up. It's been huge for Bitcoin's narrative.
For sure.
But Crowder argues that can't be the only thing people do. If Bitcoin is truly going to be a decentralized currency, it needs to, well, circulate, like actual money.
People need to buy coffee with it, pay for services.
Exactly. If everyone just holds it and never spends it, its usefulness as a medium of exchange just sort of withers away. It becomes just a collectible, maybe, not a living currency.
Okay, so those are the problems he outlines. What about solutions? If things are potentially going off track, what does Crowder suggest people actually do?
Right. He doesn't just point out problems. He offers some pretty concrete actions, things aimed at reviving that original purpose.
Like what?
First off, he pushes the spend and replace strategy.
Spend and replace. How does that work?
It's simple, really. Use your Bitcoin to buy something you need or want, but then, and this is the key part, immediately buy back the same amount of Bitcoin you just spent.
Ah, so you use it, but you don't decrease your overall Bitcoin holding.
Exactly. It gets the Bitcoin moving, makes it circulate as currency, but you maintain your position. His message is kind of like, use it, don't just hoard it, but stay invested. Keep the economy flowing.
That's a practical idea. What else?
He really emphasizes earning Bitcoin directly. So if you have a business, if you're a freelancer, offer to accept Bitcoin for your work, for your goods or services.
Cut out the middleman, get paid in Bitcoin straight away.
Yep. He mentions tools he uses himself, like Zaprite or BTC Pay Server, which help businesses do this easily. It pulls Bitcoin directly into everyday commerce.
Makes sense. He also mentioned something about a Bitcoin circular economy. What's that about?
That's about consciously trying to support businesses that are already operating within the Bitcoin world.
So seeking out places that accept Bitcoin.
Yeah, and giving them your business. He gives examples like buying wine from a specific vendor who takes Bitcoin or getting beef from a ranch that accepts it. He even points to tools like BTC Map, which helps you find local shops and services near you that will let you pay in Bitcoin. It's about building and strengthening that parallel economy.
Actively participating. Which leads to another point that felt really core to his argument, running your own Bitcoin node.
Oh yeah, that's a big one for him. Super important for decentralization.
Why is it so critical? Why not just rely on the big companies?
Because relying only on nodes run by, say, Coinbase or other large corporations introduces points of centralization and potential control or censorship. Crowder argues Bitcoin's strength is its widely distributed network of nodes run by regular people, pleb-run nodes, as he sometimes calls them.
So more individual nodes equals more resilience.
Exactly. He contrasts it with something like Ethereum, which he suggests relies more heavily on centralized cloud services like AWS or Infra to run its nodes. For Crowder, avoiding that kind of dependence is fundamental to Bitcoin staying Bitcoin. Running your own node is like verifying the rules of the network yourself.
Got it. And his final point was about rejecting corporate co-option. Sounds quite strong.
It is. He's basically warning against trends that he sees as compromising Bitcoin's core principles to fit in better with the traditional system or corporate interests.
Can you give an example?
Sure. He specifically calls out Bitcoin mining tools that comply with OFAC sanctions. That's the U.S. sanctions list. He mentions MARA as an example.
Why is that a problem in his view?
Because Bitcoin was meant to be censorship-resistant neutral money. Complying with sanctions like that, for him, undermines that core principle. He also criticizes miners who use their hardware to mine other cryptocurrencies instead of focusing solely on Bitcoin.
So it's about staying true to the original uncompromising vision.
That's the essence of it. He sees these things as deviations, as potentially weakening Bitcoin's focus and its unique value proposition. It's a pretty maximalist stance, you could say.
Okay. And he wrapped all this up with an analogy, right, about Bitcoin being like a village.
Yeah, I thought that was quite effective. He paints this picture of Bitcoin as this bustling, decentralized village.
Okay.
And his worry is that too many people are treating it like a tourist attraction. They're standing outside, maybe buying stock in the village souvenir shop like MSTR and admiring it from afar.
Instead of actually moving in and living there.
Exactly. Instead of being residents, participating in the village economy, using the local currency Bitcoin for their daily needs. His point is, a village only thrives if people live in it, work in it, trade in it.
If everyone just looks at it from the outside.
It eventually becomes a ghost town. It doesn't matter how nice the buildings look on paper or from a distance. It needs active participants to survive and grow.
That really puts it into perspective.
Yeah.
So summing up Crowder's whole argument, what's the main takeaway you think he wants people to consider?
I think his core message is really a call to action, directed at individual Bitcoin users. He firmly believes that Bitcoin's future, its survival, and therefore the fate of investments like MicroStrategy. It doesn't ultimately depend on what governments decide or what big corporations do.
It depends on the users.
It depends on grassroots adoption, on individuals actually using Bitcoin, earning it, spending it, running nodes, defending its principles. He's arguing that collective individual action is what will keep Bitcoin relevant and truly independent. That's the foundation.
Wow. So wrapping up our deep dive into Matthew Crowder's perspective, the big idea that really stands out is, well, how crucial Bitcoin's utility as this decentralized medium of exchange is for its long-term health.
And the knock-on effects for anything tied to it, like MSTR.
It definitely makes you pause and think about your own interaction with Bitcoin, doesn't it? Are you someone who's actively part of that village economy he described?
Or are you mostly on the outside, looking in through an investment lens?
Yeah. It leaves you with a pretty fundamental question to chew on. Could Bitcoin's real lasting value depend less on institutional money flowing in or the daily price swings?
And more on whether millions of individuals actually start using it in their everyday lives. It's definitely food for thought and maybe a prompt to consider your own role in how Bitcoin's story unfolds.